Freedom.
Freedom.
Yeah, freedom. I heard that this morning. My Spotify DJ played Freedom for me this morning.
All right, welcome to the Off the Charts podcast. I'm Sean McLaughlin. Steve Strazza is my co-host. Steve, what's happening, buddy?
Not much, man. Excited.
Yeah, I'm excited too. We have one of our good friends. One of the in certain circles, he might be the most popular man on Wall Street. Jay Woods. Jay, how you doing, buddy?
I'm doing well. I don't know what circles you're talking about, but I'm flattered and I'm glad to be joining you guys. This should be fun.
You know, JC knows a lot of people. Strazza knows a lot of people. I maybe know a little bit less than because I'm in Colorado, but I feel like everyone that we talk to, everybody knows Jay Woods. Everybody knows Jay Woods, is friends with Jay Woods, has a great story about Jay Woods. Like, see, I think you're the most popular man on Wall Street.
Everybody loves Jay Woods. They don't just know. Everybody loves Jay.
God. Wow, it sounds like a show. No, I want to hear some of these stories. When you work down at the stock exchange, as long as I have since 1992, you get to cross paths with some of the titans in our industry. And then over the last 15 years, when CNBC came down and had a permanent home, I just happened to be blessed in a spot where people waiting to get on the set would happen to stand by me. And, I talk people up. It's what I do. And I've made a lot of good friends over the years. So I have friends from the CNBC staff, people that have been guests on the show. And now somehow they want me as a guest from time to time. I'm still mind blown by that pivot in my career. After 30 years, you get to meet a lot of people and it's cool. And I'm glad people say nice things.
I think that's a good place to start, Jay. Just tell us a little bit more about yourself. Who are you? Talk to us a little about your background, your experience, maybe your Uncle Ralph. How did you find the CMT?
All right. I'm a Capricorn. Boy, no. I stocks, believe it or not, when I went off to college, I wanted to go to law school. I went to Fordham University in New York City, and I had a foray into stocks. I knew a little bit about it. You mentioned my uncle, Ralph Acampora. Yes, the godfather of technical analysis, the founder of the CMT. He bought me 2 shares of a stock when I was 8 years old, IBM. He said, I'm going to give you these 2 shares, but you have to do me one favor. You just have to do a weekly bar chart every week. High, low, close. And I had my graph paper and I would do it in pencil. And then 2 months go by and I was in Philadelphia, greatest city in the world. And he was back in New York and he'd come down and visit. And he goes, where's your chart? And I go, well, yeah, what am I doing with this thing? What is this? He draws a line underneath it. And he goes, what direction is it going in? And I go, it's going up. He goes, that's an uptrend. And that was my foray. It's very simple into technical analysis. I knew I got like $2 every quarter, or not even, maybe $2 a year in dividends from IBM. It actually split a few times. When I graduated college, I had 8 shares of IBM. But before I graduated college, I had an internship, and that's what got me into Wall Street. It wasn't necessarily Ralph's influence, although he was a bigger influence once I got started. He helped me get that internship, and so did Fordham University. And I was on a trading desk. Ralph's an analyst. He just looks at charts. He doesn't trade. I got onto a trading desk, a firm called Schubert Securities, and it was right out of 1987's Wall Street. Like, oh my God, like the Charlie Sheen scenes you'd see on the desk. That was what was going on, yelling across a crowded room. I had some great people there. 2 phones. And I was 2 phones. What do we want for lunch? But I saw the other guys doing it. And then I got to yell some orders across as an intern. We got lunch. We don't do that to interns now. We're too nice. But back then, it was just an atmosphere that I just loved. There was like a stadium feel to it. And the people there taught me a lot. And in 1991, 92, when I was going senior year in college, we were just coming out of recession. They just started hiring on the floor. And my mentors there said, hey, kid, they're hiring on the floor. We think you'd be a good fit. And I went down there for an interview, and I was up in the luncheon club of the New York Stock Exchange, iconic place. And I sat there and, went through a series of questions. Do you play softball was one of them. Thankfully, I did, and I played second base, and they needed a second baseman. That
That's
I
why you
think
got the job.
actually helped. You know, you don't want to tell human resources nowadays that's how things used to be. But they gave me a shot, and back then, getting a shot was all you could ask for. So I had the foot in the door, and the first 6 months. Talk about getting lunch. That's what I did. I went down to a vibrant floor, very testosterone filled floor. And it was overwhelming. There were 5,000 people down on the floor of the New York Stock Exchange at the time, 1,300 members. And I was just kind of lost. And I knew I could get the lunch and I could write tickets and I could do these things. And the training was different. People who've listened to my story before, they've heard this. It was like Karate Kid training. Wax the car, paint the fence, get the lunch and do it. And you get lunch for 10 different people, 10 different stocks, 10 different personalities. And that was the training to become a broker, because then you had to handle 10 different people and 10 different stocks with 10 different personalities. So if you couldn't get the lunch, and there were a lot of people that gave attitude, wouldn't do this mundane task or couldn't get it right, and they were gone. So a few of us survived. We moved on. And then after 6 months of, hell training, then you start learning how to handle trading, listening and watching the different traders and their styles, because technicals wasn't really where it was at in the early to mid 90s. You had to get a feel for that crowd in front of you, but the technicals added another layer. And that is what really separated me from some of my peers. Going in there prepared every day, knowing levels I want to buy, knowing levels I want to sell. I got my seat in 1998. And, from then on, I was one of the more consistent money winners within the firm. I was never the top guy, but I was always, relatively close to the top, but consistent. Singles and doubles. Every once in a while, you hit that home run. And I used the technicals. Going back to, say, Ralph, I took his class, I think, 3 times back in the 90s. I took Alan Shaw's class as well. And that was an edge that I had that a lot of my peers who just thought they could bully their way through certain situations didn't. So I would be somebody that people, hey, what do you think here? What do you think there? It wasn't always right, but it was the edge that I needed to survive and thrive. And then as we went to more of an algorithmic computerized system, and there weren't as many people, guess what? You had to know the charts. You had to know your levels, because you couldn't read a crowd, but you could see momentum swings, and you would use different indicators. So I got to study for the CMT, and every day I used a different indicator. All right, today I'm going to, use Bollinger Bands, and when it breaks through the midpoint, I want to buy it. And if it gets above the band, then comes back below, I want to sell it. And that was how I would learn my different indicators and prepare me for the test. And it told me, all right, these ones I really like. This seems to work. And, we can go into it later, but there are a few that I really like. And then there are a few that have evolved over time, like our friend Brian Shannon has come up with, that I think if you're a day or swing trader, you need to know. And I was that day and swing trader for most of my career. Now, after COVID, my firm left the floor, and I pivoted and I went to talk to people, because I'm a people person, and I got to talk about the market. And that part of my career is taking off. I get to talk to clients, try to win clients, entertain clients, talk about the markets, give speeches for the firm, travel for the firm, and get on TV every once in a while with my opinions. And it's been good to be bullish over the last year. So we've been on a nice streak, but I take it one day at a time. Just like trading, you got to leave your ego at the door. You get on hot streaks, you get on cold streaks, one day at a time, whether it's trading or in the media. And today was a good day. We'll see how this podcast goes. Maybe it won't be, but so far, so good.
Well, thanks for that breakdown. Like I said, you're the most popular man on Wall Street, but outside of our circle, maybe people don't know the story of Jay Woods and who you are. You said something very fascinating, going back to the time when you were an intern. And I want to dig into this if we can, just for a second. You mentioned the whole process of you getting lunches for everybody and learning how to handle 10 different orders every single day. Now, most people out there in the world hear about interns and getting lunches and think that it's just grunt work and it's just bullshit and they're just kicking you because you're this low man on the totem pole. But this is the first time I've heard that used as a kind of a sorting device to really figure out who has the brains to juggle all these moving parts that might play well in trading.
Listen, I don't know if they were smart enough to realize that's what they were doing at the time. I think they were bullying me. Yes, there were people that went home crying every night. I may have cried a few times to my mom. I went to college. What am I doing here? But in hindsight, every lesson I learned on the floor, some were good and some were bad, but I learned what not to do and I learned what to do. And going through that process, I made some of the greatest friends. I got a sense of humor now that I have that I didn't have back in maybe grade school. Definitely, I was shy as hell. But high school, college, that floor really toughened you up, and it was the greatest lesson being around all those people, people that I miss dearly, but people that I will never turn my back on. They made me who I am today. So when I get to be somewhere and I get on a TV appearance and I get a random text or a note from someone I hadn't heard from years, that is the nicest thing in the world, because I want to represent them. I'm not one of those people that forgets where he comes from, and those people shape me. And those are some of the greatest days, some of the darkest days. I was miserable for a while, but I'm somebody that tries to find the positive in everything. And, what doesn't kill you makes you stronger. Yes, it should be a song, actually. But it's one of those things where I, learned to, get a thicker skin. And it definitely helped with my trading ability, because behavior really was the key, and controlling your emotions. And we all deal with emotions as traders. And I punched computer screens and I made a fool of myself. There was one time where I was whining about, someone coming back again and again as a seller, and they were having fun. If someone could get under your skin, they would make sure they did it. And then they started having fun with me. And I realized, all right, I just got to keep my mouth shut and just do my job, because I don't want to be that guy. And luckily it wasn't something that stuck with me. But yeah, there were ups and there were downs, and there continue to be. But the floor, that really, provided me for, it was the best school you could go to. It was the school of real life. And unfortunately, some people are handled with kid gloves now, and that's fine. There's nothing wrong with it. But back then, I could take the heat in the kitchen, and it was okay.
And like roughly how long? Because I think this is a great practice, and it's too bad that so much of the work that we do is remote now. But like, how long was this hazing process? And was there like a moment where it turned that like you can think back to, where they're like, all right, we can't have this guy getting us lunch anymore? Like, how did that transition kind of take place?
Yeah, 6 to 12 months. It wasn't the longest part. When you look back, when you think about it, it felt like forever. No, you were always the young guy, and if you showed that you could, learn quickly, I mean, you're taking orders quickly, regardless if it's lunch or a stock order, and you're remembering it, and you're adding it up, and you're calculating, and you're judging the people around you, because you had to deal with the personalities. You had to make sure people were happy, because you had run-ins with people every single day. At the end of the day, you got to go home and then work with them the next day. So you had to be able to learn how to let things just slide by, or have a conflict and deal with it right then and there. One of the greatest things is we had Yankee tickets. I think I went to maybe 100 Yankee games in the 90s. Good time to go see Yankee games, too. There were ways, and we would go to the bar. We had bars up in the stock exchange. There were ways you could just bell to bell and then try to separate it. And that's what I did. So the hazing process was 6 months, but you get to another level, and then you're clerking and you're dealing with different personalities of different brokers, and some would throw pencils at you. Some would be calm, cool, and collective. And you take a little bit of their style and then you make your own. And, I hope the people that got to clerk for me got to learn a lot from me. And, some of it, some of my behavior, they probably like, I don't want to be like that. And other behavior, like, oh, that's a good skill. Look, he didn't let that guy bother him. He didn't let that guy get under his skin, and he kept going. But when it came down to it, you had to be just quick on your feet. You had to be agile to criticism, and you had to move on, because when you let things dwell and fester, it would destroy you down there.
Now, Jay, you are quite a bit different than many of the traders that Straz and I come across. We deal with traders, or we talk to traders who are trading their own money, or maybe they're trading money on behalf of a firm or a money management firm. You were a little bit different, right? So you were a market maker on the floor for a long time. you have a little bit of a different mandate than, say, me and Straza when we're trading. Like, yeah, we want to make money, we want to have a positive P&L at the end of the day, but it was more to it than that for you. Am I correct in saying that?
No, yes. So as a market maker, we were specialists when I started. I started with the firm Spear, Leeds and Kellogg. They got acquired by Goldman Sachs in 2000. I was with Goldman from 2000 to 2014. They left the market making operation on the floor. Then I was with another firm, IMC, before they left the floor after COVID. So it was the same job, three different firms. But risk management was number one, number two, number three. We had to manage risk. Now, early on in my career, we were a little more risky, let's say, and I could take bigger positions. So when I bought and sold stock, it wasn't with my money. It was with the firm's capital, and it was my job to manage the risk. So if I bought 1,000 shares of a stock, I knew what, I when I bought 1,000 shares of a stock, that was like nothing. I wouldn't think of the money involved, but if I got long 100,000 shares of a stock, the money. Like okay, I'm not supposed to tell stories, but after 10 years, I think there's a statute of limitations. But I remember, and I know someone who's going to watch this and want to smack me. I bought 200,000 shares of United Technologies at 75. Well, do the math. That's a hell of a big position. We're talking, tens of millions of dollars. And I got a call from upstairs. Why are we long $20 million worth of United Technologies? They didn't want to hear because it's going up. They just didn't want to hear that. I took out a sizable seller at the figure, which was a round number, figures are round numbers, because I could see one would trade. It's trading 99 the figure, 99 the figure. I'm like, good God, just someone take it. And with VWAP, another new change, I'm like, I'm taking this whole damn thing and boom, it's going to go. And it did. But then when I got the phone call, you got to cut that position back. I got a little out over my skis and we sold it down, and we slowly got out of it, made a little bit of money. And yes, over the next 4 or 5 days, the stock went from 75 to 80, and I have to bite my tongue, and I'm very bad at that, saying I was right. Yeah, it was going higher. But so there were different times. Yes, we were at an advantage. I get to use the firm's capital, but that's if I didn't make money for the firm, I would have lost my job quickly. So I was a consistent moneymaker, singles and doubles. And, try to go home. And here's the thing, you try to go home flat every day. We learned that after the financial crisis. There were times we would take positions overnight. Wouldn't want to take positions into earnings. Some people would do that. That was something as a day trader, swing trader, as a market maker. Overnight risk was your biggest concern. So you try to have a good day going back and forth. And then at the end of the day, hopefully it's positive. You start all over. But there were times I'd see a breakout on a chart, buy it, close at the height of the day. Close at the height of the day. I'm buying more. What are you doing? Well, the momentum is there. And those were situations that some of my bosses and coworkers didn't understand because they didn't follow the technicals. You had a good day while you're pushing it. But it's you just try to manage risk. And once we got through the financial crisis, those large positions, 100,000 share positions, we didn't. No. Like 10,000 shares was big. We would try to get as risk averse as possible because we saw some down days, and then our psychology changed. And instead of swinging for the fences, we were just trying not to get hurt. And defensive trading is fine, but you're not going to have you're not going to ride the meat of a move when you're playing defensively. So that changed. And then as we grew technology wise, we lost people, and the floor went from a vibrant floor of 5,000 people to, I don't even want to say how many people are down there now, but less than 5,000, less than 500. I would say less than 400. It's not what it once was, but there are some great people still down there, and they do a good job. They're very valuable. The market maker, I think that model is much more important than an electronic system. You want that line of defense. You want that human at point of sale when things get crazy. And that was one of the jobs that people didn't realize we did. Yes, I traded, but at the end of the day, if a company's down, and say it's in a chemical company, and the rest of the sector's up, and this stock's down, the CFO or the CEO, if I had the relationship with the CEO, and some I did, they get on the phone. What the hell happened to my stock today? Why are we down and everyone else is up? They never called to complain when their stock was up and everyone else was down. That's because they're great. It had nothing to do with me. But I would have to take those calls. And believe it or not, there were days like that when I would throw technical looks into their emails or on the phone and say, listen, well, this is resistance, and it's Goldman Sachs, it's Merrill Lynch who continues to sell it at this level. Once we break through there, I think we're going to go on a nice run. Or we just had a negative crossover. Death cross, a lagging indicator, I know, but you can throw that out there, and they'd be like, "Oh, a death cross, holy crap!" And you could try to explain what the move was. You didn't go too deep in the weeds, but the technicals are very important. And now more and more of these companies are asking, was that a technical move? Was this something technical? And we can equate that to the last year in this market. Tom Lee was at one of our CMT events. I don't know, Straza, you were there. It was JC's Christmas event. And he was there with Mark Newton, who he works with at Fundstrat. And he came out and he said, 2023 was the year of the technician. The technicians got it right. The trends were there. The setups were there. Everyone else was calling for a recession. All right. I thought we hit a recession too, but that wasn't what I was looking at. Starting price action. And price action, every technician knows, is what matters. It's what pays. And those trends and those reversals were there for a lot of people to see.
Jay, slow down. This is so cool, right? Because most people don't really realize how markets work, right? This is a whole complex situation, right? And there's these mechanics going on behind the scenes. When you hit buy and sell, a lot of stuff happens, right? So you're saying that on any given day, if a CFO of a publicly traded company didn't like the way that his stock traded, he could get on the phone, call the market maker and say, "Hey, what the hell happened to my stock?" That's what you're saying. You would take calls like that?
You would be able to provide information as to volume, price action, participants. Right. It was a one-way conversation. As we got past 2010, everything is documented. These are not personal relationships that I had and get on the phone because, it has to be a one-way conversation. They can yell and scream, "Why is my stock down?" Okay. I will give them information as to what happened, factual, and then add some technical background. But it wasn't like, you got to sit there and buy my stock. That's the first thing we said as market makers. That's not our job. Our job is not to support a company, just stand there and buy it. My firm would never have stood for that. I would never have been, ethically, allowed to continue doing my job if I just stood and bought at one spot or sold at one spot. We had to be the other side of that trade, and the market would ebb and flow. And yes, there are spots where I would dig in and buy a little bit more because I thought it was a good opportunity, or sell a little bit more. But these conversations were, basically me calling up and like, "Hey, I own NVIDIA," and let's use a New York Stock Exchange stock. I own IBM, and I work at the company, so of course I own the stock, and I have access to the market maker. What happened to my stock today? Those are normal questions, and each company, regardless of exchange, will get recaps every day. Most of them are computer generated, telling them all the activity in the stock. But to get that human feel was an added layer. I thought the New York Stock Exchange did very well.
So as a market maker, you ultimately stand ready to buy or sell the security that you're making the market in at the bid ask, right? But you also had another job top of that, right? So there's limitations there, right? You're not just prop trading where you could buy or sell any stock whenever you want, right? You have limitations there. Yeah. Then your firm is also pressuring you to make sure that you have a positive P&L for the day, but within these tight parameters. So how many stocks were you making a market in each day?
It started with maybe 5 to 10. And then as the technology ramped up, I could handle 30, 40. Now people handle hundreds because you set it and you forget it and you get alerts if something moves that you really have to pay attention to. So it's not as exciting as dealing with, people coming at you all the time. When it was open outcry and auction, IBM traded by itself. It had its own crowd. People would just stand there all day long. So we evolved, and that was what was interesting. But to get back to so we had to manage risk and make that market. We got judged on the markets we made. If the markets were too wide between the bid and the ask, and we didn't narrow that spread and put our capital to work, then we weren't doing a good job. companies, when they listed the New York Stock Exchange, they got to pick what firm and what representative of the firm. So I would compete. I'd be blessed if my firm chose me to go up for a stock. And then if I'll give you an example of a stock I was a market maker for, let's just use Generac or something like that for an example. I had a relationship with that company, and the company didn't like the way the stock was trading. They could complain to my bosses. They could complain to the New York Stock Exchange. They could take it from the New York Stock Exchange, or they could switch from another market maker from one market maker to another market maker. Now, I was blessed that no one ever had, that. I mean, I had some, discussions that people were frustrated, their stocks were down, but at the same time, no one ever crossed the line and said, yeah, we got to get rid of this guy and, go somewhere else. So I valued those relationships. And then I had to have a relationship with the brokers, because every day I had to provide them with information. Like every morning we give a look. How's the stock looking? And that's what's changed the most. If you want to pivot to a conversation, the look was IBM's looking down 2 on 50,000 shares. All right, well, my guy would buy stock down $1. Here's 30,000 shares. Let's go. It's down $1. I'm buying 30 of 80. No big deal. Now IBM's looking down 50,000 shares. You're a buyer. Oh, it's on sale. This is great. Yeah, but I'm volume weighted average price. Just want to go along 10% of the volume. Here's 5,000 shares. They don't care about price. They care about volume. And that was the biggest change. And that started around 2009, 10. And that's where Brian Shannon and I became friends later on, when I gave a speech about the biggest change at the stock exchange was how people trade. They used to go and fight for price. I will pay this. I will pay that. And you were judged on price. And if you bought a stock on an opening down 2 and it closed up 1, you did a great job. And guess what? I love this guy. He's getting more order flow. But now you're going with the volume and it goes down 2 and it goes up 1. Like you could have crushed it. And people were used to make decisions and put their neck on the line. And now they just want to be average. And this is the thing that bugs me. Like, I went to college, I went to high school. My parents said were on top of me about my grades. If I got average grades, I'm not going to get rewarded for it. But if you get average price execution, that's the goal. And that, to me, I get it. I just don't like it, because I came from a world where people were literally fighting for every penny. And, steenth and eighth, because I did start when we were in eighths and then went to steens and then went to pennies. So it blows my mind, although now I'm used to it, that we just want average price and no one's in there picking spots, except for the people at home, the people that follow you guys that are day trading or swing trading, because that's what matters. Those entries, those exits, those specific price points. Yeah, you guys aren't trading for VWAP. You're trading to make money, and that's how I always wanted to trade. So I didn't like the change.
So the VWAP is now the participation trophy of good execution. Is that it?
It's crazy.
It is for brokers.
You get the participation trophy.
When you're pitching clients, you tell them that we beat in the VWAP, 80% of the time, and that's great. That's what sells. But when you're trading, what you want to do is use it to your advantage, because the psychology was there in front of me. I saw a buyer, I saw a seller, and I knew their levels. And, it was easier. You could read a crowd. And if the junior broker from Merrill Lynch is working a buy order and he gets a tap on his shoulder and the boss comes in, guess what? It's probably a very important and very big order. Be careful. So you could see these things. So things changed, and the technicals would show me the levels of interest, as Brian Shannon calls them, where you want to get involved. And VWAP trading is basically what happens. And I use the UTEX example. I bought 200,000 shares at one price. That set off all the VWAP guys, because they missed 200,000 shares. Now they got to chase volume, hope that price catches up. And yeah, it was a change that you have to adapt to, and the algos adapt to it. Look at moving averages now. There was an example not too long ago where remember Apple finally ditched the car and it rallied that day? Where did it rally to? I think we talked about this, guys. I think this is what inspired me to be a guest on your podcast. Apple rallied up to a declining 50-day moving average and hit it to the penny and then came in. You tell me that algos aren't programmed to technical levels now. It's something you need to have in your arsenal. Is it the be all and end all? No, but I'm not going to go into a gunfight with a pea shooter. I want to have an arsenal of weapons. So when I go into trading, I better have all my technical levels memorized in my head, and then the ability to pivot. Because if I'm wrong and something changes, then you got to adapt. And that's the other problem. That's behavioral. Too many people, and I've been guilty of this, I still probably will do it tomorrow. Who knows? But you like a position, you like the idea why you took a stock, yet something changed and the trend changed. Perfect example is Google. Google looks like it's breaking down right now, but I've owned it for 15 years. I'm not going to sell it. I'm not going to sell it. It's Google. It's a core holding of mine. I'll go down with the ship if I'm wrong in Google, or maybe not. I almost went down with the ship in PayPal. As soon as it broke that long-term uptrend, I was out. I had a great run. I didn't catch the high, but I caught a breakout 5 years prior. I had a nice run. I got the meat of the trade, and that's what we want as traders. I know I would love to catch the top and bottom of every single trade, but as long as I got the meat of it and I met my goals, which I established going into the trade, I'd be happy.
You talk about how execution traders strive for average. This is a thing on Wall Street now, right? Money managers, RIAs also strive to be average, right? Nobody wants to get fired. When I was growing up, Wall Street always kind of appealed to me because it was a place where you go to compete. It was like career Darwinism, where the strong survive. Now it just seems like everybody wants to be average. Have you seen like a change over the years in terms of...
Yeah, it's boring. It really is. I mean, but it is managing risk. Okay. And if we're risk managers, you're not going to blow up by being average. So, hey, congratulations. Gone are the days where someone has a bad day and they get fired for it, because you won't see that blow up. I mean, maybe you will. There could be errors, but for the most part, no, there aren't people that put their hearts on their sleeves. Yeah.
Jay, somewhat related to that, I'm curious. I want to get into trader headspace here a little bit. You've been around a long time. Obviously, you're very good at what you do. You wouldn't be here still 35 years in if you weren't. And you came in, whether it was when you were trading on the floor or maybe later in your career when you were trading your own money, you always came in with a plan. Speaking of the floor, you had a mandate, right? You had to make tight markets. You had to have positive P&L. If you didn't do those two things, then you weren't doing your job. So, okay, great. Now, I'm sure you had those days or those weeks where the shit hit the fan and your whole plan just fell apart for whatever reason. Maybe it was within your control, maybe it was not. When you find yourself in those situations, and I'm sure you have, what do you do? Do you have like a heuristic that you follow that tries to get you back and centered and get you back focused and get you back on plan?
We're very superstitious down there. So if things go well, you use the same pencils, you eat the same food, you do those things. When things, I've lived through a lot. I lived through .com where people are just shaking their heads. How is this going up? How is this going up? This IPO makes no sense to me. And they would run over on the short side. And then you live through some of the worst crises, the financial crisis, but the one thing that I'll never say is I've seen it all. And if anyone comes on your show, hey, I've seen it all. Off the show. That's what's great about our job. We don't know what the next day is going to bring, and that's why we come back to work every single day. But to come back sane, you have to have a short memory. As the great Ted Lasso says, I don't even know what he says. Be a goldfish. I do know what he says. He says, be a goldfish, have no memory. You try. It's impossible. I remember some of my worst trades. I remember some of my best trades. And it was some of my better days where I checked myself at the door because your ego can inflate. And there's a story I tell. I remember coming home. It was like 2002 and I had a few good days. And, we bought this nice big swing set in the backyard for the kids, and it was installed. They're out there playing. And, my ego got the best of me. I go, I just paid for these last 2 days of trading. And I'm like, Whoa. All right. And it can be gone tomorrow. I've seen the highs. I've seen the lows. I've seen people blow up. This is a true story. I didn't see it with my own eyes, but apparently there was a car dealership, a sports dealership that would open up for 3 months down at the bottom of Wall Street. What 3 months are those? Bonus season, January, February, March. And people would get those bonus checks and they drive off on those cars. People don't realize that bonuses are a gift. And they're not guaranteed. And I learned that lesson. I didn't like it when I was told that my firm was told that. I wasn't told that. It was told to my firm. But it really was telling to me. Some of the hardest lessons I learned were some of those most pointed things. But as far as shaking it off and getting into a routine, you got to take notes. You got to take mental notes. And some people would go to the bar. I did that occasionally. Some people would work out. I did that rarely. But you would find a system. I would come home and I'd be T-ball coach and I would be soccer coach and Little League coach. And those were days like you come home to a family, to your kids, you quickly forget everything that happened during the day because your kids don't care. They want to see dad. They still don't care, by the way, 20 years later. They just want they don't know your stress and they don't care about your problems. So, I had that outlet and I was very involved in my community and it was good, but everyone has to find their way. Now I walk, I listen to podcasts. I read a little bit more and I try to get my mind off of things. But now as an analyst, I'm listening to more people and getting inspired by, learning different, traits from some of the people that I admire within the industry. As a trader, I did the same thing. The traders that I thought were the most composed and were the most consistent profit takers, I would try to emulate them the best I could.
So I want to talk more about when shit hits the fan on the floor. Like, what are you doing? Right.
So those are fun stories, aren't they?
Yeah. So but really, like, let's go back to 20 years. You were there for 9/11. You were there for the financial crisis, right? And how about dates? I didn't begin my career until 2010, but dates like May 6th, 2010 stand out. I was auditing a broker
flash crash,
and it was not good. And then there was August or September 2015. Was pretty wild too. We had that huge sell-off intraday. A lot of these funds were down 20-30%. Like how is a market maker operating in an environment like that? I mean, this stuff is happening.
Those are the toughest environments of extreme shock to the system. For every seller, there has to be a buyer, and the market makers, a buyer when there are sellers. Now we're just going to buy it lower. Hopefully, eventually cost average and minimize the loss, which is very important. You're not thinking, how am I going to make money in this situation? You're thinking, how am I going to prevent this from being a catastrophic loss? And then once you get to minimizing the loss, then you think, can I be profitable? And then you think, all right, but yes, all those dates were epic in their own regard. 9/11 to me I was the market maker for American Airlines, believe it or not, the morning of 9/11. The morning of 9/17, my boss took it over, thank God, because I was still young and I don't think I could have handled that crowd. But it was something else to be involved with the community on September 11th. We lost a lot of money on the 17th when we reopened. No one cared. That was one of those days. It wasn't like 87, which I heard stories about. I wasn't there for that. I started in 92.
The market closed for a week after 9/11?
We closed Tuesday, 9/11. September 11th was a Tuesday. We were all there at the trading floor at the time, but the market hadn't opened. It was between 8:30 and 9. And we knew after the second plane that no one cared if the market was going to open. We were under attack. And it was, I tell this story a lot. We forgot. I was there for 93 for the first bombing in February 93. who I couldn't fathom that was really a trial run, or they tried to do the same thing than what happened in 2001. But in 2001, the P&L went out the window. That was about human life. We didn't know exactly who made it, who didn't. We lost two members who were at a meeting at Windows on the World that morning. One that was a regular in my crowd, was Sutcliffe and Sullivan, and that was disturbing enough. But in a sense, only two people, because when we left, we all scattered, and some of us were in the cloud, some of us weren't. I got on a boat and said, "We're going to Jersey," and I said, "Sign me up." I got on a boat to Jersey, and I got to go around, and I saw the first tower fall, like literally right there. And but I was on the Hudson. I avoided the cloud, and then I got to Weehawken, New Jersey, when the second one fell. But I didn't know what my friends were. I didn't know what happened. I didn't know if the buildings went down towards the exchange, which is 3.5 blocks away. Yeah, that. But I'll tell you one thing: when people ask me, they ask for stories. The greatest trading day. I mean, I can give you that. But the best day of my career ever was going back. So you said, how long were we closed? All the way to Monday, September 17th. That Monday morning bell. I got to Jersey City, New Jersey, with a lot of my colleagues. We got on a boat. We crossed the Hudson. We were probably the first people onto the island, and it was military barracks, and we are walking. They hand us flags, and that was weird. And we're walking with American flags to the stock exchange, and there were different levels of security, and we had to show our ID, and there were things you'd never forget. One, you never forget the smell. That was just awful. And then just how calm and quiet it was, and it's just sad. And then you got to the floor, then you started to see your other brokers and your other friends, and you're hugging them. And then we got closer to the bell, and the bell ringers that day, led by Dick Grasso, our president at the time, were the chief of the New York Fire Department, the chief of police, and then our politicians. Imagine this scene today. Our Senator Hillary Clinton with our mayor Rudy Giuliani hugging on the bell podium, everyone tearing up. It was the most patriotic thing I've ever been a part of. I would never want to relive it again for a million years, but the feeling of pride I had going to work that day with those people that we share a bond that is just unbreakable to this day, was one of the most amazing experiences of my life. And when that bell rang, there were tears. I lost a lot of money that day. I got run over, but our bosses, we had a great talk. Todd Christie gave a great speech to our troops down there. And, it was just about being there, and being there for our listed companies, being there to do our jobs. And we were the first place to open. There was no Yankees, no Mets, no sports. Football was still canceled. There was no Broadway shows. TV wasn't back. If you remember Letterman, everyone went dark. We were the first people to open. And the bell ringing was Let Freedom Ring. And when that bell rang, it was like a big middle finger to the rest of the world that we're back and you can't keep us down. Most patriotic thing I've ever done.
If you had to find a silver lining from 9/11, in a country that seems to be increasingly divided, and it's so sad, that moment showed us all just how capable we are of being very, very united as a country. And that was cool.
Yeah, I've never felt so united with just strangers. Even leaving the city on the 11th, a woman fell over and people stopped and they helped her up. Let's go. And then there was someone on our boat who was really not handling the situation well, and someone sat with them and gave them a water. You don't want to create that kind of environment to bring us back together as a country. But I can tell you one thing: if something like that ever happened again, I think all these silly divisiveness, divides we have in this country would kind of fall by the wayside, at least for a little while. But you're right. It was uniting, and that was the silver lining on a very dark day.
Jay, it's very clear that you were in it, man, and it deeply affected you in both negative and positive ways, and you've come out the other side, better for it, I think. So, hey, awesome. I was there, not really. I came to New York 2 weeks after, and I walked around Lower Manhattan, as close as they would let me anyway. And I didn't quite get the sense of the smell those first couple of days, but there was definitely a smell there. I remember that. But let's let's bring it back to a little bit more current times now. You're not a floor trader anymore. You still trade, you participate in the markets, but you have different mandates now. But what do you do? This is called off the charts, right? So let's get outside of the market for a second. What do you do outside of trading, outside of regular business hours to keep your mind sharp, keep you fresh, keep your sense of humor where we know it to be? Like, you have any tips for people to stay centered?
It changes over time. It depends where you are in life. It depends what your family situation happens to be. And it depends what you enjoy. Some people enjoy reading. I'm a puzzle guy. I have to keep my brain going. That was one of the things I missed the most. Was when you had all those people, your brain, I could do numbers. I remembered things. I remembered everyone's badge number, everyone's name. Now I'm like, who's that guy? It's Sean, right? Like these are things where I'm struggling because I'm not on my game. So I do things like that. I love my Wordle, my connections, my New York Times crossword puzzle, regular puzzles, things that keep my brain fresh. Trivia. Anytime you want to go 80s trivia with me, I'll crush you. Those are things that I like. I like going for walks. I like listening to different podcasts. Music will always be a go-to. I get very moody with my music. So, right now I have no idea where I am, but The National is probably my band of the year. Before that, it was The Killers. I find something, and then I'll go back to U2 out of nowhere. How did that come up? Because they're at the Sphere. So everyone has their different things, and I'm sure I'll find new things as I get older.
Now, would you say, this is a question I want to ask everybody on the podcast, are you a routine guy? I listen to trading podcasts. I've been listening to trading and investing podcasts for too long now, and all these master traders, they seem to have a routine. Like it's a set thing. I wake up every morning based on how I feel. I do a different thing, and I feel like left out of this whole routine thing. So
you're not doing ice baths at 5 a.m., Straza?
I have things that I like to do and will do most days, but every day is new and different for me. And I don't have a routine. I feel like, I don't know. Am I missing something?
I think you're underselling yourself. I think you have a routine. You just don't realize it's consistently inconsistent, and that's okay. It's what it is, because you're still at work every day. You're still looking at those charts. You're still doing things. You don't have to do it the same way every single day. I had routines where I was going to the gym every day after work. I was going out drinking for a while every day after work. Your routine switch. Now, I am an early bird. I get more stuff done in the morning, every morning. I write lists. The first thing I do, I write lists. Stocks I need to research. I go top down all the time. I look at all the major sectors. I look at all 11 sectors. What stocks are moving the sectors? Every month I reprint them because the re-weightings go up. I didn't know Uber was the fourth biggest stock in the XLI until last month when I changed it up. So people don't realize that. You have to know these things. But I try to get up early. I can't sleep, so it doesn't matter. It's easy for me. I'll write lists. I'll talk to friends. I am somebody that checks in with people to keep relationships going, and it's something I like to do. But no, there isn't one holy grail. Oh yes, every morning I eat my eggs at 7:00 and I have my one coffee. I have my coffee. Without my iced coffee, I'm nothing. But no, I'm a little more like you. There's no consistent plan except write a list, get up early, get most of your stuff done early in the day, and then give yourself some free time in the afternoon.
You said you call your friends, you talk to people. I feel like a lot of people leave this out. And I feel like, at least for me, talking to my friends, I talk to Sean every day. I talk to the analyst team every day. Me and JC are annoying each other all day, every day. That's a part of my process. Like, I need to talk to these people.
You need to vent.
Yeah. And it's not just sharing ideas. You're right. It's a psychological thing. It's just being human for a little bit every now and then throughout the day.
Yeah. Me and Straza will bitch to each other about, we got out of that trade too early, or, what were we thinking getting in, managing that trade the way we did? Like, we do it all the time.
Yeah, and that's part of the process. That's healthy. You can't go home and bitch to your kids like, oh my God, why did I buy that stock there? What was I thinking here? Or, get nervous because I have a position overnight, because nothing's going to change. You can't trade it till 9:30 the next day. Yeah, so having that group of friends, I have friends within this community that I'll talk to regularly, and then there are friends that I would just check in, friends that you guys know. Like Joe Fahmy and I will send notes to each other every once in a while, and then when the market gets a little crazy, all of a sudden I'm talking to Fahmy a couple times a week. I'm talking to Brian Shannon a lot. I'm talking to JC more. Yeah, these are people that I value their opinion, and I know I can tell a story to about, so I'll stop your bitching. Well, I'm bitching about trading and they understand, so I can do that. You have to know that if I come home bitching about trading every day, no one's going to want to be near me. Although they still don't want to be near me, but that's another story for another time. It's just, you need to talk. It's healthy, and traders need to have their own community to share with. I think Twitter is the greatest place in the world. That's where I made some of my greatest friends. You guys, we've socialized more on Twitter, but it's like I just saw you yesterday. There were people that I had met through Twitter that I didn't meet in person. Joe Fahmy is a perfect example. I'd known him for 7 years. We'd done, these podcasts together. We've tweeted, we've, talked on the phone, but we never met in person. As JC said, it was very romantic. It was a moment, but Twitter is a great place. And there are other stock Twitch communities that you can just focus in on, dealing with the people that are in your community and that will understand what you're talking about, because you need to vent, and sometimes you need to share a good story or two. There's nothing wrong when you're bragging to your friends who, like I get it now. Someone on Twitter said something to me nice. I said something positive about a healthcare stock that just broke out today, and I'm used to them coming at me like, how could you say this? How could you say that? And this guy, random guy, I don't even know if he used his real name, just a nice note. That was great. Oh my God, thank you. Or someone sees you do something on one of your podcasts or on TV. A gentleman at the stock exchange, a security guard, came up to me the other day. He goes, "I saw you on Bloomberg. Oh my God, that was so great." And I'm not just saying that. I'm like, wow, thanks. Like, so you need a community, and I'm somebody that likes to compliment other people, and when they come back and they pay it forward, and you're the recipient, or I like hard. Tell me what I'm doing wrong. Tell me I have something coming out of my nose. I want to know. I want to get better. And that, I think, was also a floor trait, because people weren't shy about telling you when you were screwing up either. And I respected that at times if the message was done properly and said properly. So yeah, have that group of friends, have that text thread that are just talking about stocks and ideas. It only improves you, and you get so many new perspectives from those friends as well.
Well, Jay, you're making the sales pitch for why I put together a traders meetup group here in Colorado. We get together twice a month, and I tell people who are new to the group a lot of the things you just said, like, hey, our wives, our spouses, our best friends, they don't want to hear about our stock market stories. They can't relate. They don't care. They're not interested. So come hang out with us. We're your people. We speak your language. Here's where you can share your wins, commiserate about your losses, share ideas, or just, we traders see the world through a unique lens. And it's hard to explain to people, but we traders, we get it. We understand.
Yeah, we see license plates with stock symbols, and hey, there goes Union Pacific. Oh my God.
That happened to me today. That literally happened to me today. I was telling my girlfriend, she's looking at me like I have 5 heads. I was like, yeah.
That's how I remember license plates number. Hey, better have a stock symbol in there. It's important.
Is this a problem for the future generation of traders and investors, right? Like, you guys know better than I do. I think I caught the tail end of it, but community was a big thing. Jay, you talk about, we used to go out for drinks, after work. Sean has always been involved, whether it's the StockTwits community, the FinTwit community, right? You guys all knew each other. I feel like I just kind of got lucky to kind of get accepted and jump in at the last second. But these days, everybody's working from home. You're not in an office. I think Twitter's a great community, but you have to kind of work at it to really meet people. I think this is something that will be challenging for professionals in the future. How to build that community, how to build that network, because you're not going to have the same opportunities to do so. I used to remember my first job. I would get forced to go to happy hours 2-3 times a week. I never wanted to, but I'm glad I did, because now I still talk to those people. And that's just not going to be the case in the future.
Yeah, it's different, but I learn a lot more from the younger generation. I mean, yes, we're older and they should, hear stories from us and learn from that, but it's not true. You're always learning. And the younger generation is, going through COVID. I had three kids go through COVID through, college and two in high school at the time, and it affected them and they communicate differently. And you have to adapt. And what I see young, great technicians that share amazing ideas. You have two of them there with the all-star charts. Your friend in New Zealand and your friend in South America. Those kids are the future, and they don't realize it. But when I can bring them to the stock exchange and put a smile on their face and tell them stories, that makes me happy. But they're also sharing great ideas through their platform that I'm like, wow, I didn't even think of this. That is brilliant. And people have to get out of their comfort zone and be able to share and then take criticism, but also, know that there are people out there that want to learn from you as well. And like, seriously, I can't duplicate the charts that you guys put online because I don't have the tech savvy to do that. I am always trying to learn from the younger generation, and like every day, like something as stupid as an Instagram video that people put up and they put out there. Can't do that. I just don't know how. I need to learn and make myself better. And then these TikTok videos, some of them are really good videos. How about Roaring Kitty? That premise he had on YouTube was spot on about GameStop. It took 6 months before it went viral and he became a phenomenon. But his premise was kind of simple. There's huge short interest, and I like GameStop. Okay. And, then he kind of got a little, farther down the road, but it caught on and it became something. And the way we get our information now is phenomenal. People watching this, no one would have watched this, years ago, but now you'll get thousands of views. And, thank you for watching. I don't understand what you're doing. You could be doing something better. But anytime I can help somebody out, it's great. But I learned just as much from talking to you guys as you could ever learn from talking to me.
So shout out, you just referred to Louis Sykes and Alfonso De Pablo's two absolute superstars on our analyst team. So Jay Woods gave these guys the experience of a lifetime when we were in New York in January, late January, where he gave them a tour of New York Stock Exchange while we were there for one of our events. And they're still talking about it.
When they came back to our event that day, I mean, they were like two kids. Their faces were glowing. They were so happy. They were like, that was the greatest thing ever. Jay is such a great guy.
Yeah. Well, I am blessed to work in the financial capital world. I don't take going in that building for granted any time I go in there. It is a very special place. It's not what it once was, but it is still the financial capital of the world. It still holds very big importance. And if you like financial media, everybody's there. It's kind of cool.
You've been there for 3 decades. Where do we go from here? Right. The change has been absolutely insane. I'm sure you couldn't have imagined we would be where we are today when you started on the floor. When you leave the floor one day in the future, where are we? Is anybody walking into that building anymore? Because that would be sad if they're not.
In 2005, I said we'd be done in 2010. It would be a bowling alley apartments. The exchange always finds a way to adapt, survive. I've been blessed to know the team that runs the stock exchange, not just at the NYSE, but ICE, Intercontinental Exchange, which owns it. They understand the significance of the building. The companies that list there understand the significance of having a human being there. The history does matter. I know people are like, oh, it's old, it's ancient, but no, it matters. And that place will always hold a special place, not just to me, but to anyone in finance. And I'm not worried that they're going to go away or get replaced. We got replaced for 10 weeks during COVID. And guess what? I thought that was the end of us. And guess what? The markets were more efficient with a human at point of sale than when the human was in this room trying to be a market maker back at the New York Stock Exchange.
So is that true? Because you kind of got a dry run then during COVID of what things might look like if they were to go full remote. So what was the takeaway?
Well, it was total fear and panic. Like, I can't believe we're shutting down. We had to. I mean, we were kind of the epicenter of COVID. I think we all had it. for everyone. And remember, it was really bad. People were, I mean, we joke about it now. Oh, you got COVID. Oh, see you in 2 days. You've got a cough. But no, I mean, the severity, and the anniversary is coming up on March 11th. Will be 4 years. And I blogged about it. I'll repost that blog because it really puts it in perspective what we went through that day. And when we said we were closing down, that's exactly what it was, a dry run. All right, if I'm the NASDAQ, I'm licking my chops. I'm like, oh, let's see. We're better than them and it showed that our statistics as a stock exchange, the markets basically had wider spreads, meaning that the buy side, the sell side were farther apart because you didn't have a human. You didn't have humans negotiating those important trades that open, that close. And as a result, people kind of backed away and the markets were a little more volatile. Now, yes, the markets were volatile because we were at the end of COVID. We shut down. The first day we were down was March 23rd, which was the low, and then we rallied back. But by the time we got back in May, they had 10 weeks of data, and it showed markets much more efficient with the human there. And that's where we add value to the companies that trade down there. That's where we knew we were doing our jobs. And that's why I believe the stock exchange will always be a valuable asset to any listed company.
That's fascinating.
Well, that might be a good place to end it right there. Jay, as a result of this talk, I am certain of three things. Number one, you're the man. Gangster. Number two, we're going to have to do a part 2 to this because I know you've got a million more stories and we've already exceeded an hour. We promised we'd keep this to an hour. So we're going to have you back again, Jay. So be prepared for that. And number three, in the future, All-Star Charts, we're going to have to put together in New York City one night, an awesome 80s trivia night. And I challenge you, Jay Woods. I'm going to take you down.
All right. Challenge accepted. And I will put money behind that challenge. I'm so confident in that one. Well, thank you for having me. This has been fun. And I will come back anytime. Good luck with this podcast. I know it's new for you guys, and I see bright things in your future, and I can't wait to see who else you have on this show because you guys have a lot. You say I have a big network. You guys have a big network yourself, and I can't wait to see who comes on next.
You're the man, Jay.
Thanks so much, man. This was great. We learned a lot from you, and I hope the people that watch this, got a little sense of, hey, trading's not easy. It's hard being a trader, and there's a lot of reasons why, and we're going to be digging into that with a lot of future guests. So thanks for doing this, Jay. We really appreciate it.
All right. Thank you, guys.
All right. Well, take care.